What are the key differences between buying and financing investment property or a primary residence? So let's first quickly discuss what's investment property. It's investment property. It's something that you buy in order to rent. Now, some people ask me, what if we buy a two-family home and going to live in one unit and rent the other one? Is it investment or primary? No, it's primary. As long as you live in the property, that becomes your primary residence. But if you buy a two-family and you're going to rent both, or you buy a one-family or any other combination, and you're now not going to live there, that becomes an investment property. When it has to do with financing, these are the major differences. A, for investment property, you need more down payment. B, usually the rate is a little bit higher. And C, normally you need to have a stronger profile, like a credit score. Now, let's break it down. Why? The one thing that about all three of these items is that the risk is higher for anyone who is buying an investment. Risk to the bank, that's what I mean, risk to the lender is higher. And they know this because they did studies. They took 100,000 investment properties that were financed, 100,000 primary residents, and they saw from that study that the rate of default, or in other words, that non-payment for the mortgage is much higher where it's for investment properties. I guess one of the big reasons it's not, people are not really losing the roof above their head. They don't live there, so many times they, if they need to default, that's what they default on. So having said that, buying an investment property is still is a great investment, especially for many. We personally know in the office so many successful real estate investments, and they don't need to have so many properties. Even if they have a couple, they already do so much better. It appreciates over time. You pay off the mortgage, your tenants help you pay off the mortgage, and that's how they grow. One last thing about this: if you plan to buy an investment property, and because one or more of the reasons that I mentioned before want to say that it's going to be your primary, don't do this. These days, banks are so careful, and they can find it anytime, and they can actually ask you to buy that mortgage back, or even worse, report you to the authorities. So it's not worth it. The rate difference is not that big. Plus, there might be some other benefits when you buy investment property.